Hi all, welcome to the second episode of Direct Stock Investing series. Hope all of you are doing great. Before I begin, let me ask this question in today's episode. So, what is the single most challenge that you face while doing direct stock investing? Please share it in the comment section. I just want to know, what are the pain points that retail investors are facing when they do direct stock investing? Okay, now let's start our conversation around this episode where we cover around the topics IPO and secondary markets. In our last episode, we talked about how a share is created, how a company is formed, what are the different stages of company formation, right? Now the company ABC with three promoters, or I am sure you are well aware of those terms. Promoters are nothing but the owners of the company. So they want to go public, right? They want to raise public money. They are done with private investments. They want to go public. So that for that, it's a process. You have to reach out to a bank. The bank will facilitate how to do the IPO. They will decide the price, the listing price. So when you are listing in the stock market, there will be a valuation, right? The company will be valued at so and so crores. So all those parameters will be decided by the bank and the company. Then they will do IPO. IPO is nothing but initial public offering. They are listing in the stock market, right? So before I talk about stock exchanges, there are a few things that everyone should know. Apart from raising fund, there are other uses, or there are other parameters that actually helps a company when they do IPO. What are they? One is, of course, raising more money. Outside of that, before IPO, the shares of the company are not liquid, right? You can't say, for example, you invested in the private market. So there are two kinds of market. One is primary market and one is secondary market. Primary market is nothing but the markets before IPO, where the price will be decided by the investors and the company. Basically, the buyers and sellers during the meeting room, the boardroom discussion. During that time, they will decide the price, and based on that, the share price will be decided. It's pre-IPO phase. Secondary market is nothing but stock market, right? So when a company is in the primary market stage, the stock liquidity is very less because it's not available to trade in the public markets, and you cannot, suppose you bought a private company share, you cannot immediately sell those shares. You need to find a buyer for that, and it's a long process, right? So once you do IPO, your shares will become more liquid. The visibility of your share will be more and more investors can buy. The buying and selling will happen quite seamlessly in the stock exchange. So the number one first point is, it's a good opportunity for the early investors to exit because liquidity will be more. So 2 points we covered over there: exit for early investors and liquidity aspect. Third point is, the price will be decided by the market participants, right? As per the valuation, as per the management, as per the business model, so and so reasons. So suppose you want to refinance, you want to take loan or something, it's pretty easy because your company is anyway trading. You can pledge your shares. Pledge is nothing but you can keep your shares in the bank and take loan. Bank will easily provide you loan because bank has complete guarantee as shares, right? So refinancing will be much more easier. And last point I would say is the credibility aspect, brand visibility, trust among investors, because your company is now trading in the public market. So everybody can see what you are doing. You have to. So I will talk about that maybe in the next section. So basically, you have to publish quarterly results and all sort of things, right? Maybe I will talk now only. So once you list in the public markets, in the stock market, there are certain guidelines that you have to follow. Firstly, you have to publish quarterly, results, profit and loss uh, statement every quarter. So in India, the financial year starts from April 1st and ends in March 31st. So Q1 will be April to June, and subsequently Q2, Q3, Q4. Every quarter, the company has to, the public company, the recently listed company, all the listed company have to submit quarterly results, so that all the investors can see how well the company performed, what is the status of the profit and loss, what is the status of the asset liability, all sort of things, right? Second point is, whenever you are getting a new order from a client, or whenever you have some regulatory issues, an auditor resigned or an MD is appointed, every nano things you have to inform the exchange. That should be made available to the public. So you can't perform like an anonymous entity. You are no longer a private company, right? Your information should be made available to the public. So each and every information that you do, your company do, has to be published to the stock exchange and made available to the public. So there are a lot of regulatory things that you have to follow. There are compliance things that you have to follow when you are a public company. So yeah, that's the case with a public company, but there are a lot of advantages, like I mentioned before. Overall, if you see, it's always good at some point of time, a private limited company should list in the stock market. So the company that we are talking about, ABC, the hotel or whatever business, right now is listed in the stock market. Now let's talk about the stock exchanges. When I say the company is listed, right, where exactly they list? So that's what we are going to discuss now. There are two major exchanges in India. There are many exchanges, but primarily talking, there are two major exchanges in India. One is BSE and one is NSE. Bombay Stock Exchange and National Stock Exchange. Both are situated in Bombay, the headquarters. So these are the two main exchanges where all the companies will list. So the companies will be traded in the stock exchange. I hope till now it's clear, right? Now, as a retail investor, as an individual investor, how can you buy a share? Can you buy directly from the stock exchange? No. For that, you need market intermediary. Those are nothing but the brokers. I am sure you might have heard about the brokers: Zerodha, Upstocks, Grow, Angel One. There are many brokers, right? So you have to open an account in any of these brokers. Only through that you can access stock exchange. Only through the broker. So all the buying, selling activities happens through broker. Now, why there is an intermediary between you and the stock exchange, right? It's a natural question. Why should a broker involved in this? The primary reason is stock exchange should function as an unbiased entity. There should not be any bias. For them, all investors are equal, right? So somebody says, for example, somebody who is working in the exchange or closer to the exchange, if they are asking to purchase something for a lower price, there could be conflict of interest. So that is one reason, and another reason is there are a lot of regulatory complaints the stock exchange has to follow. It's not viable for the stock exchange to access the investors. There are so many other aspects, right? Basically the costing, taxation, all sort of things. So to make the environment much more easier, brokers came into picture. So brokers will do everything, the front end, back end. Brokers are the direct uh, connection between the investors. They are the bridge between the investors and the stock exchange. So all the buying, selling, all the activities happens through broker. Uh, Taxation, costs involved while buying a share, while selling a share, everything will be done through broker. So I hope till now it's clear. We IPO'd the company and listed in the stock exchange, either in NSE or in BSE, and the retail investors can now buy or sell your share, ABC, the company ABC, through a broker. There is enormous liquidity for your stock, and as an owner, as a promoter, if you want some amount, some money, some cash flow, you can directly sell your stock in the secondary market, right? Just like I said, you just have to place an order through your broker, it will be placed. So you will get how much ever share you are selling, based on the market price, you will get the required amount. So yeah, I hope till now it's clear. And the last one point in this video that I want to talk is, so now you, like I said, you listed in the market, you are trading, all the regulatory compliance you have to follow, quarterly results you have to publish, and at the end of the year you have to publish an annual report. So what is an annual report? Annual report is the entire details of the company for the past financial year. So whatever you have done, so starting from the manager's commentary, mostly in the annual report, the MD or CEO will address the investors. They will talk about the achievements, the challenges, whatever they faced, and what is the future ahead, right? So from that we'll understand how well the company is placed through the basically the annual report. But from the beginning, if you see from the CEO's forward, that is followed by major achievements, whatever the company has done, the work, the great work that the company has done, and of course the financial statements, right? The P&L statement, balance sheet, cash flow statement, everything should be present in the annual report. So annual report is the thing for the retail investors or any individual investor to read and understand how well the company is performing and whether should I invest into that company or not. So now your company is available to the public. Everyone must be knowing about it. Now you can't simply sit, or you can't work on your own terms, because there are many investors, there are analysts, there you have to conduct analyst calls, you have to answer investors questions, you have to address media, definitely. So all sort of things will come into picture. So the ABC company is reaching newer heights, but at the same time there are a lot of compliance aspects also. Yeah, I think this video is all about that. Probably in next video, we'll dig little deeper into how the profits generated by the company, maybe in this case the company ABC, how are you going to reward the shareholders in a public market. So there are different ways the company can use their profit wisely for growth, for rewarding shareholders, all sort of things, right? Now we are in a stage, we are no longer a private limited company, we are a public company. We are making good profits, we are much more structured, streamlined, good management working, right? So things are going well. So in the next video we will talk how the profit distribution, rewarding shareholders, and the growth aspect will come into picture. I hope it's clear. So if you are liking the content, do subscribe, share it with whoever likes to learn about direct stock investing, stock market, companies, all sort of things. So actually, it's a great time to understand, to learn about direct stock investing, because during the previous videos, like I said, this market is extremely overvalued. I would say most of the stocks, uh, we are not sure when the growth will come. So it's a stock pickers market. It's very hard to do, direct stock investing or index investing. I'm talking about lump sum amount. SIP will work, but still, you have to pick stocks wisely, right? So yeah, it's always good if you learn direct stock investing. Hope I'm giving some sort of content or value in that direction. Stay tuned for the third episode. It will be coming shortly. Till then, take care.